Hello again, it's me, Damien Fay from moneytothemasses.com, bringing you some insight and news from the last 7 days in finance. It's the 17th of October, so we're talking about the last 7 days or so. The big stories have again been centred around Brexit. Now, we've seen this thing, hard Brexit, soft Brexit. Very emotional words that have been having the markets get themselves into a twist. And we've seen the pound plummet. We're at the point now where if you go to an airport and try and buy euros, you're probably only going to get €1 for every pound you spend. That's how far it's fallen. Now, of course, the exchange rates at airports are not reflective completely of the currency markets because the travel agencies like to screw you and take some more money. So what you need to do is shop around. Now, the Brexit, I prefer the full English and the continental Brexit. I think they're much nicer terms. They're less emotional. Now, the problem with Brexit is that the pound has tumbled and it causes the FTSE to do the opposite and rally. Now, that's all down to the companies in the FTSE who have earnings overseas. If you earn in dollars, then those earnings are worth a hell of a lot more, around about 16% more than they were before the Brexit vote. So that's why the FTSE rallies. It's just a mechanical equation. It's a relationship that when the pound falls, the FTSE rallies. Now, how long can this last before the falling pound becomes an actual problem for the economy? Now, one of the things you're going to notice is that in the coming weeks, we're likely to see the price of petrol go up by about 5p a litre. Now, make sure you shop around because petrolprices.com is a good website where you can see the prices of the best prices on petrol from petrol stations near you. So have a shop around. Now, the FTSE did hit an intraday high. That's why everybody got so excited. But that was always going to happen, like I said, because the pound fell. Now, the key is to see whether it can sustain that rally and push on through the highs of last year. And it's not looking likely at the moment, but who knows? Now, there are winners and losers in the FTSE rally. Everyone talks about, the FTSE's rallying and it's flying. Anything that's exposed with earnings, as I've said, to outside the UK does well. There's a whole bunch of companies in there that have been doing rather badly, and actually their share prices are lower now than they were before Brexit. The Brexit vote, should I say. They are things like banks and a lot of high street retailers and house builders. Now, on house building, it was revealed this week that the average price of a house in the UK is now 8 times the average wage. Now, that doesn't surprise me, but there is hope out there for people because there's been a new surge in the old 100% mortgages. Now, they're not 100% mortgages like they used to be. They are a clever way of using the bank of mum and dad. So if you have parents who have large amounts of money, or not even a significant amount to count towards a deposit in a savings account, they can keep hold of that money and they can keep access to that money. But the bank can give you credit for the fact that they have it and give you a reduced rate. Go on Money to the Masses and go into the mortgage section and have a search for the 100% mortgages. And there's an article explaining how you can do it and how you can find these deals. Now, the only other story really that hit the headlines around Brexit was the Marmite gate, when Marmite was going to be taken off our shelves because Tesco's didn't want to pay the Unilever's increased price because they were going to increase prices because of the falling pound. So that was resolved. Lots of breakfast related content this week. What's been going on in Money to the Masses? Well, good podcast again this week. We've got a podcast where I talk about how to maximise your investment returns as well as the best ever money saving tips. So make sure you check that out and keep an eye on the MTTM Roundup hashtag on Twitter. Thanks a lot.